680's Richard Southern joined us. Richard, wow, the stock market sell-off continues. Dizzying plunge on Friday and now again today. So 1,175 points.
I watch this every day, Francis, right? I've never seen this. And even if I was covering the Dow for 132 years, I would never have seen this. This is the biggest one-day point drop in the Dow's history. When the closing bell rang today, the Dow was down 1,175 points. Percentage-wise, it was a 4.6% decline, biggest percentage point drop since 2011. And, of course, we were down more than 600 points on Friday. So what's happening here, you ask? Well, investors in the States are worried about rising interest rates. They're concerned about bond yields going up. A bit of turmoil politically in Washington, D.C. But there's also the feeling that Wall Street's just come so far. It's gone straight up that we were in need of a correction. Francis, only two stocks on the New York Stock Exchange closed the day higher, more than 530 lower. The TSX, as you saw there, down more than 200 points. A bloodbath today. We'll see what happens tomorrow, whether or not the sellers come by, the buyers step back in.
You know, and all of this happening at a time when Canadians are thinking about their RSP contributions, the deadline's approaching. A new report finds that fewer Canadians are actually planning to chip in this year.
Yeah, I guess, a bit short on cash. I mean, 36% of Canadians, according to this Bank of Montreal report, 36% not planning to contribute to the RSP this year, 17% still undecided with a month to go. The average amount already contributed is about $4,600, and that's lower than last year. Top two reasons for Canadians not making a contribution are other expenses taking precedence, perhaps housing, mortgage payments, and not having enough funds around. Of course, the deadline this year, March 1st, so you still have a month to make your contribution and take down the what you might need to pay in your taxes. So it's good if you can manage it, Francis.
So I saw this next story on my social feed. Doritos in some hot water after its CEO talked about a new product for women.
Ladies Doritos is how we referred to it, believe it or not, Francis. Indira Nuri, the CEO of PepsiCo, the parent company of Doritos, said that while men eat Doritos with great glee, as he put it, pouring the scraps from the bottom of the bag down their mouths, crunching away and licking their fingers, women, he says, don't. Women, the CEO says, don't like to crunch loudly in public or lick their fingers. And so he says he's considering maybe coming out with ladies Doritos, which would have less of a crunch, be cleaner eating experience, would fit in a handbag, he says. Now, of course, campaigns, they're slamming this. Francis saying it's a tired general stereotype. And really, I think it's a problem that I don't think women really have here. So some interesting comments from the CEO of that chip company.
Monopoly is coming out with a new edition specifically designed for cheaters. I love it. So this game actually encourages players to rob the bank. You think you get mad at your friends playing Monopoly now. Just wait to see how many friendships this ruins. Monopoly Cheaters Edition coming out. Yes, it encouraged players to rob the bank, encourages you to lie, cheat, and steal others' identities to reach financial dominance. How accurate is this, Francis? The idea for the game apparently came after a Hasbro survey found that half of Monopoly players already cheat. Originally, when Hasbro launched Monopoly back in 1903, it was intended to teach players the dangers of income inequality and monopolistic wealth practices. But here we are now embracing that. Quite interesting, don't you think, Francis? Sign of the times here. You always wonder that person who wants to be the bank, right?
Yes, and apparently in this game, were they taken? In this game, everyone plays the banker on their turn. So it's easy to manipulate the funds, as it were.
I see. Very interesting. So there's new research out that says there's a huge benefit to ditching your chair at work.
Indeed, Canadian adults spend about 3/4 of their working day sitting or reclining, and we know that's not good. European Journal of Preventive Cardiology found that standing burned 0.15 calories more per minute per kilogram than sitting. So you add it all up. And by standing for 6 hours a day at work, average 140-pound person would basically lose 5.5 pounds a year, about 22 pounds in 4 years. Standing not only burns more calories, the additional muscle activity linked to lower rates of heart attack, stroke, and diabetes. So the benefits could go well beyond weight loss. CityNews reporters have known this for a long time, Francis. That's why most of you guys are standing up all the time.
Well, I'm sitting right now. You're the one who's standing. And I know at 680 you've got these desks that actually move up, right? So if you want to stand, you can stand.
A lot of companies getting into that now, offering standing desks. So that's a trend we're seeing for sure.
Very interesting. Thank you, Richard.
Thank you.
Here's Christina Howren.